Good evening, everyone. My name is Anne-Marie Band, and this is the Leeloo Level Up After Hours Levels for Trading, brought to you by LeelooTrading.com. We're going to take a look at several of the indices, and the one thing that we'll notice is everyone's coming up and into significant resistance zones. They've been stalling out, but very interestingly, we've moved up into these congested zones very rapidly. And my suspicion is that that is really being brought on by the amount of people that are short, trying to get in front of the fade down, and what the market is doing is continually rising and they're having to buy the cover. If you looked at the first segment that I showed you there, that's brought to you by TradyTix, and what they tell us there is a little bit about daily flow, weekly flow, monthly flow, and you can see all the way to April the 6th, it's really still very negative position. So pullbacks are going to bring us buy zones as long as that negative position stays and we hold support. And that's going to be the thing, right? We can position negative. If we break support, things are going to get good for the sellers. But if we hold support, then it's going to push them back up into the edges. Where are the top zones for us? We could move all the way into 4170. The trade action is the following. My thought is 4154, giving traders a lot of trouble right now, but they are holding the floor somewhere around 4151, 4150. And so as long as they are holding that zone, the pullbacks are going to be buy zones. Indeed, up into the close of the prior day at 41.39, those look like great areas to buy that dip and then watch it move. The moment that it begins to lose the close of the prior day, things can get a little bit more dicey from the long side. Traders are going to become more aggressive on the short side, push us into those lower levels near the floor of the trading day today. So what do we want to do? Well, we want to look to see if we can hold the levels. We take the trade, allow it to ride up. Don't try and buy any breakouts unless you see it banging on the head here for hours and hours and still making higher lows. If that happens, when it breaks, it's going to pull all the shorts into the space where they're running for the fire escapes. And so that's going to push it to the north. But again, these traders are buying to leave the market, not enter it. And so that in itself is going to be something that creates a little bit of a vacuum area that price action will try to revisit. And frankly, we've got quite a few vacuums sitting down here, which makes me just a little bit tentative about being long and staying long in the current environment. That being said, it is bullish. Pullbacks are buy zones until they're not. What's the key area that I'm looking for to have major support? Anywhere between 4,085, 4,095, somewhere there. Going to be looking for that. I always become more cautious with longs as soon as I start testing below the close of the prior day. Forgive this froggy voice. I've been trying to get over a bug for who knows how long. All right, taking a look at the NQ. The NQ is not quite as strong. It's sitting on the inside of the prior day's candlestick. A lot of times when traders fall into the inside of a prior candlestick, they will try to retrace it first to the 50% level, which is around that 13,199 zone, and then to the open of that prior day. Well, so far we are holding that low area, bouncing up over the 50% mark, but still congested. This chart will resume some strength as long as it moves up and over this zone. Careful again with buying breakouts. Remember, breakouts occur, they pull back. If you have a shallow pullback that holds this edge, you're off to the races. If it doesn't, you got to step back and take a look at things. I like waiting for those sweet spots, and they're down here. right near the breakout zones. And I like to sleep at night, so I don't trade. I don't really have trades on when I'm sleeping because I do not want to have to get up and have a stroke. So, because anybody can be at the wrong direction at any time. So here we go. Looking at these edges, watch them, holding into the zone. Where might we go to the north? You know, that's a really good question. It could be somewhere much higher, certainly, and we've got a few gapping events. Where is that? Nope, that gap filled. We are sitting right in this heavy congestion. All of this says we are really close to some sort of top. But here's the thing. We can sit close to some sort of top. But if people keep trying to get in front of that top, they're going to drive prices higher because as the buyers continue to move up in the space, the sellers have to also participate in the buying to get out of the space. It's a self-reinforcing loop that pushes price higher, and we've got to be very careful about that. For the YM, the YM looks pretty good. It's holding these zones fairly well. Coming up to the edge well above the close of the prior day. Any kind of pullback into these ranges look really great. This is the high of the prior month. And so pullbacks into that zone as well as the close of the prior week, and that is the 33,525 area. This chart looks great. It's just turned positive on the day, and really it's the only one doing that. Still allow the fade to give you the opportunity to buy. It's just going to open up your risk if you don't. Here's the low. Notice how bullish this day was. We opened the day and then immediately began to run, retraced very little. Absolutely fantastic from this formation. It's my husband clapping at a baseball game, if you heard that. So here we are pulling back on this edge, 33,450-ish or so. That's going to be the zone that is really going to be a bit of an ideal buy. If it starts losing that area, sellers are going to get fairly aggressive and pull it down again. We've had a lot of stops getting run, and those make very wonky looking volume profiles that really have a lot of low volume nodes that need filling in. All right, let's take a look at this. We've got the RTY being a little bit sideways. What we do know is right there up at 1827, we saw a lot of sellers. But as we pulled back, the low was made at 1789-ish, 1790-ish, and it's pulled forward. So we're not heading lower on the underside, and that means our pullbacks are going to continue to be buy zones. The opening and move above 1815 going to be fairly nice, but as long as we fall into the body of the prior candle, remember, traders are going to want to retrace 50% of the range, and then if they hold that, they're going to bounce again. If they don't hold it, they're going to try and fill in the very bottom of this second candlestick formation, and that's really going to be fairly interesting. Actually, I think it'll be a pretty good buy zone. Let's take a look at oil. Oil is like this. It's got a monster gap, and it had a monster gap because over the weekend OPEC Plus said, hey, listen, we are not going to produce as much. We're going to stop producing by 1 million and odd some barrels a day, and off to the races it went. But interestingly, it did not create really a ton of motion after the fact. So this might be, hey, a lot of people think inflation might come back and it will trouble the market. A lot of people think, hey, we're in recession, and so that pullback for oil is just going to be fine because we're not going to be using it anymore. Whatever the case is, here's what we're looking at. Areas around 79, if you can get close to there, going to be great buying zones as long as you can bounce and get back up over 80. If you bounce into 80 and you cannot get back up over it, cut and run, because chances are when it comes back down into the 79, it'll break through it. I think these guys are the sweet spots, 76.85, 76.94, something like that. Those are going to be great areas to watch it come in, stabilize, and then try to make a lift. But here's the thing, this is a supply issue, and even as we fade, we're going to have bullish action in the long run. We just have to pace it through with the rest of the market. Last thing we'll look at is gold. Gold is holding very sideways over the last, I don't know, what is that, 12 days, something like that. 1950 looks like the bottom. 1995 looks like the top. Just wait for it to come down here. Watch it start to bounce and take the long. It's that simple. Don't short it if it loses that edge right away, because it's going to bounce and then tell you what it's going to do. And so far, every time it's come in, it's bounced to the top. Every time it's come to the top, it's faded to the bottom. So we trade the pattern until it breaks. All right? Thanks for watching the Leeloo Level Up. My name is Anne-Marie Band. This has been brought to you by LeelooTrading.com. See you tomorrow.